From chocolate bonbons, buttons to bonds. A new way to unload financial burdens and bask in a better interest rate than your bank. Hotel Chcolat wants to raise $7 million to open more stores. They also plan to build an eco-factory in St. Lucia, the Caribbean country where they get most of their cocoa beans. To pay for it, they want to borrow money from their customers.
We obviously could go to our bank to raise funds for these development projects, but when we compared that scenario with this scenario, we just get so much more. We are getting a closer relationship with our very best customers, and on top of that, we're actually paying the return to them rather than to our bank.
Over a 3-year period, members of Hotel Chcolat's Tasting Club can invest $2,800 for a gross annual return of 6.72%, or $5,800 for a gross annual return of 7.29%. The interest, though, will be paid not in money, but in chocolate, which works out at a $26 box of chocs every month. You've got a tray of chocolate here alongside £18 coins. If you had the choice, would you prefer the interest in chocolate or money?
Most definitely money. So you can buy the chocolate with the money if you want to.
I'm rather a big fan of chocolate, and it does sound like a very good return, much better than what I'm getting at the moment on in my bank account.
I think it'll have to be the chocolate. And it's very intriguing, I must say, but interest in chocolate, I don't know. I prefer the money.
After that 3-year period, investors have the option to renew the bond annually or opt out and get their money back.
We have obviously been pored over by our advisors who are authorised to give FSA approval to the chocolate bond. We're making this offer to our very, very best customers, and I'm totally convinced that the risk is at a reasonable level considering the level of the chocolate bond.
This is the first chocolate bond to be launched in the UK, so it's uncertain how liquid this investment actually is.
It's a lot of money in anybody's book. I don't know anybody who can afford to just sort of either lose it or not invest it wisely, and there's plenty of really good investment opportunities. The bottom line is you've got to ask, will you get your money back on this? So never mind will you get your chocolate, will you get your money back? I'm not saying the company will go bust, but you know, you are being asked to make a credit assessment of a company, and in return for that you're going to get some chocolate.
Exposed to commodity prices and the chocolate bond market being so new, some think this could be a risky investment where the return may not be as sweet as it seems. Aisha Dergahi, CNN, London.